Let's get into gold, guys. Gold here, folks, incredible stuff. We are seeing downside in gold continuing. So here's your daily gold chart. Beautiful sell-off here over the last couple days. Remember, we tested the 4,100, we pierced it, and we got a bounce. Now, I have a couple new trend lines I'm monitoring. So we have this one here, which is a great one, right? This one really gives us a near-term trend point to watch for a breakout on gold. On the other side, this is a trend line I've now started to watch very, very closely. Check that. It's not from that point. It is from this point here, from this high pivot right through these lows. Look at that. Look at how that works out perfectly. I mean, this is what I love about the charts, right? Is that you have pivot point, pivot point, pivot point, and pivot point. And then on the other side, and this is what I love to see, you have that. So high pivot to it broke out, support, came in, support, went up, support, etc. So essentially on both sides, if we put these in, you can clearly see here, here, all along here. I mean, this is just multiple hits and then right in here. Okay. So this is what we would call a wedge pattern. Now, the wedge pattern is important because, number one, it gives us support down here. This would be at 4,000 on gold, and it also gives us resistance. It also tells us if price breaks out or if price breaks this line, does it break down? If it breaks down, 3,900, this pivot low is my first technical support, followed by, if that breaks, 36 to 30, basically 3,500, right? Right down here. And you can see, I mean, this is one of my favorite levels because it was, notice how many times it hammered 1, 2, 3, 4. And almost 5, and then it broke out. And there's a tendency, and remember this from technical analysis, guys, as I always try to teach, when you have a trend line, right, and you hammer on it multiple times, it's obviously very important, which is this was very important, right? Up, down, etc., down here, and then we broke out. When you do finally break out, there's this tendency to want to go back to call the scene of the crime. And then it can go even farther to the other side. But it's almost like, you know, your kid goes away to college or the university, and then they come back for Thanksgiving, or they come back for Christmas, or they come back for a holiday. And once they come back, then they're like, all right, I got my home time. Now I'm going out on my own again, kind of thing, right? And that's kind of the same sort of thought process here. And we've never retraced to the scene of the crime. And that's part of, in technical analysis, that's one of the reasons why I think we do need at some point to go back there. We just don't know when, right? We obviously have support here, then support here, all the way down to get there. But let's be fair. The stock market was up on Thursday and gold sold off. Now, a lot of that had to do with the dollar. The dollar obviously popped the last couple of days. Now, what's interesting is the dollar's actually slightly down today as the DXY is open today, right? So the dollar's down a little bit after being up high. But the problem is, too, is that we're not seeing gold back to the flat line or green. So there's this disparity of weakness in gold right now, which makes sense, right? We've had high, lower highs all the way down, low, lower, low, lower, low. So we are in a downtrend on gold. There's no denying that. The question that as a technician I'm looking for is, does it break out or does it break down? Which way does it ultimately go? All right. So these are the different factors that as a technician, as a chief market strategist, I'm watching, which I always love to give to you. These are essentially tactics and knowledge that institutions use. But I'm a big believer that, listen, I was a beginner and I got smoked in the markets. Listen, I still get smoked in the markets on occasion. I don't think there's anyone that doesn't. But it's about win rate, right? It's about, can I win 7 out of every 10 times? If I can, okay, then the math can work out. Essentially, I want to be the casino, not the gambler. The gambler, you go in there, the odds are against you. At least the casino is going to win more than they lose, even though sometimes they do lose, right? The gambler occasionally wins. All right, so before we get into silver, and I want to get into silver, I do want to just mention, guys, that Rumble, you guys know Rumble sponsors these videos. They are rock stars. And again, I love them over there. They have the Rumble wallet. In the Rumble wallet, they're actually giving $10 away for free just for downloading it. Verified 10. But yeah, I have it here on my phone. Literally, you can scan this little QR code right here, or you can click the link in the description. But the point is you can buy and sell crypto. You can buy and sell gold. All right. Well, I'm in, right? Plus, they're giving free $10. Use verified 10 to just grab that, right? So essentially, you download it. And I always look at it like time, right? So for me, if it takes me 30 seconds to make $10, the math. If it took me 20 minutes to make $10, I'm like, not so great, right? But 30 seconds for $10, verified 10 in, they'll send you I think it comes in USDC or something like that, right in there. No brainer. So anyways, just the point is it's useful because it allows me to trade crypto and gold in the same portfolio. And then it also enables free $10. Okay, I'm in. All right. Let's get back to the charts, guys. But thank you to Rumble. Next up, guys, let's go to silver here. What do we have on silver? Silver, again, this is called what I call the bouncy ball pattern. Okay. What is the bouncy ball pattern? The bouncy ball pattern is a big drop with a big bounce. A smaller drop because it's closer to the ground. This is the ground with a smaller bounce. Another drop with a tiny bounce. And what ends up happening here, and let me just draw this in, right? So here we have a trend line. We have the big fall. If you drop a ball from a high level, it bounces big. Then it comes back down, hits smaller bounce, and then it breaks. And that's exactly, I mean, look at this. Big down, up, smaller down, etc. And now we got the little bounce. And what this is telling me, and I know there's a lot of bulls out there on silver. And listen, I want to be clear on this. Just a reminder, because people always get so bent out of shape when I'm near-term bearish. I'm hugely long-term bullish, right? So like, all I have to do is literally look at the balance sheet of the U.S. government. All right, well, Social Security's going bust, doesn't have enough money. Government is at almost 40 trillion in debt. They're not cutting back on spending. If anything, they're spending more because of wars and et cetera. So obviously, long-term, I want to be in metals. And I have long-term holdings in metals, but where do I buy more? Do I buy more at 64? Well, maybe. I mean, it's okay, but I'm more of a technician. And I'm going to look for lower. So here we have this support level here. If this breaks, and we almost broke it here, we never confirmed, but if we break this, you're headed down to this pivot high right here at 54. I might nibble a little bit there, but really the $50 Pierce and 40 cent. I mean, this area here. Now, a lot of you guys will say, well, 1980, it was at $50, 2011. And obviously there's still been I mean, if you do inflation adjusted, why would it ever go back to $50? Great point. Problem is markets don't act rational. Markets are driven short-term on emotion, long-term on fundamentals. Remember that. Short-term on emotion, long-term on fundamentals. So yes, you're correct when you say that. So long-term, we should be at $100 on silver, eventually 150, eventually 200. But in the near term, fear is fear and greed is greed. Let's get into gold today. Gold on Friday was down sharply. Overnight opening lower. It is bouncing back, but it is still lower. So gold here, what we see is you have this wedge pattern here, developing beautiful move down here. Classic going back to this high pivot, low pivot, low pivot, low pivot, and low pivot. This is what I'm following. So we have support around 4,000 on gold, and we have resistance around 33.75 or so. I'm watching to see which way it breaks. Does it break here? Okay, well, then it goes potentially back to 3,500. If it breaks here, it probably won't go straight up because you have a lot of resistance along the way, but you could eventually see new all-time highs on gold. Silver, struggling to hold this 66 to 64 level, but it is still holding. So we got to give it credit. Right now, it is still holding, and I'll keep my eyes on that, but certainly an interesting chart there. So let's take a look here at the S&P futures. Here you have them. This was Friday's price action. It was generally a higher day, but a lot of chop. This was, or I should say, this was Thursday action. This was Friday on the futures, a big tumble as things, again, did not look so good between the U.S. and Iran. And then we saw over that period and into Sunday night and coming into Monday, the market slowly recovered on more positive headlines coming out about negotiations. Is anything settled? Is there a deal done? The answer is no. That 60-day window is still going. But again, it's always about the spin. We have to keep that in mind. All right, couple other things. I've also noticed that even when the futures are down, there's always a tidbit of positive AI news to slip out into the market. We saw that last night when the CEO of Intel came out with some positive comments. So last night, Intel was trading up sharply in the overnight, is still up a little bit today. But again, these commentaries from government-owned companies like Intel at this point that kind of push that, oh my goodness, we could grow 10x, we could do this, we could do that. It gets the AI trade and the kind of the animal spirits all together running again. And so we see a lot of the AI stocks up today. Some aren't, but again, a lot of the memory stocks and obviously Intel is higher this morning. So let's take a look here. So number one, we have the oil trade. Notice here, guys, this is your daily candle on oil. If we flip over here, this is where oil opened on Sunday night going into today. And you can see, again, it was higher, sharply higher, trading north of $78 per barrel. And then obviously the spin came out in the overnight and oil fell is now negative on the session. Look at that, folks. Negative on the session on oil. Now, again, if we do see a further breakdown on oil, technical analysis suggests the big level to watch would be this gap fill. There's a big gap in the chart on oil right here. The level is 67.25. That would be major support. I'm skeptical we'll get there in the near term, mainly because I look at it like you have all these strategic reserves that got depleted. Are countries really going to wait to buy any oil until we get back to 67? Or what if the deal does really fall apart between the US and Iran and oil spikes back to 100? And so they're probably already taking advantage of this price and beginning to fill their strategic reserves. But the problem is, I mean, we're talking hundreds of millions of barrels here. It's not going to happen overnight. And therefore, there's going to be a longer lasting bid, probably in this mid-ish 70s range on oil for the foreseeable future. All right. We mentioned Intel. You can see again, I don't have the overnight data, but Intel again gapping up at 4 a.m. when the pre-market began. Faded a little bit, but now is pushing back up. And like I said, again, leave it to a government partially owned company to just continue to say something positive. Now, remember, last Thursday, markets were down